Hey, if you're an options trader and you're still struggling with getting those consistent profits, I guarantee there's one thing that's missing from the equation, and that is by looking at the stock charts, reading the stock charts, technical analysis. You have to understand which way the stock may or may not be going, and you can do that, you can figure that out by looking at the stock charts. Okay, I've been in this business for 30 plus years now. Stock reading, chart reading, technical analysis has been the best way for me to remain in the game for this long and to be profitable. So if you want to see what you may be missing out on, what we're going to do here is I'm going to show you some simple tips to figure out how to help you see which way the stock may or may not be going. And that helps you with your option trades. Just got to remember, when you make option trades, the direction of the stock is the most important thing. If you can't get that right or be in the vicinity of getting that right, you're going to fail on 95% of your option trades, okay? So what we're going to do here today is we're going to look at the stock charts. I'm going to show you what I see, what's been going on in the market, and we're going to look for some things, for some setups for potentially the next week. I make these free videos for the trading community. We're all here to help each other out. We all want to become a better trader, all right? So let's just jump right in and take a look at what we have. One of the most important things you can do is always start by looking at the indexes, the three main indexes, the S&P 500, the NASDAQ 100, and the Dow Jones Industrials, okay? Now we look at the SPY, which is the exchange traded fund for the S&P 500. It is probably the most widely traded stock ETF out there. Okay, it gives us a great overview of the market as a whole and where the market is going as a whole. Before we do that, let me just tell you what you're seeing on your screen in front of you. If you're new here, this is what we do. I show you my setups. I show you my charts. Up here is the price action. I look at daily charts. Okay, so each one of these lines is 1 day's worth of trading, and we keep it simple. The KISS method. Keep it simple, stupid. I only have a couple indicators on my charts. You don't have to bog down your charts with more indicators. Some people think, well, wouldn't more indicators help me out better? No, that won't help you out better. You'll all just see is just a big jumbled mess. So we have the price action up here, and I have three moving averages. I have a 20-day, which is the blue line, a 50-day, and a 200-day, all simple moving averages on the daily charts. These are open, high, low, close bars, okay? These are not candlesticks. And down here is the only other indicator I use, which is the RSI indicator. You can see over here, it's a 14-day look-back period. It's an oscillator that oscillates between overbought and oversold levels based on the price action up here. I use the 80 level and the 20 level to help me get an idea whether a stock is a little bit overbought or a little oversold. Doesn't necessarily mean a turn is coming right then and there, but it is a warning indicator that a stock might be getting a little frothy at the top or getting really oversold at the bottom. These blue channels here is one of the most important things you can do when reading stock charts or looking at stock charts is to see which way a stock is trending, okay? We draw these channels to help us see which way a stock is moving, and the stock will oscillate within these channels up and down. So you can time your trades better on the upside if you want to sell here, and on the downside if you want to buy here. The trend is your friend. I will say this every time. Stocks trend in a certain direction for long periods of time. The best thing that you can do is get on board to a trend. And I'm talking longer term periods here, months and months, years and years, okay? We don't trade intraday. I'm not an intraday trader. I don't trade off of 1 minute charts or 5 minute charts because that's just too hard to do. The market is too random to really, I'd say, make a living as a trader by trading 1 minute charts. It's just too hard to do. It's too much volatility. There's too much back and forth. It's really hard to do that. And if you try to do it, you will exhaust yourself. It's emotionally taxing, physically taxing as well. You're sitting there all day long watching 1 minute charts. It's really hard to do. Give yourself more time. Let the trend develop. Look at this nice trend here. Here's a W pattern. The other thing you want to do, you can learn technical analysis. There's always patterns that are being made and patterns that will always repeat themselves over and over again. This little W pattern, which is typically a bullish pattern, you can see as it plays out, the market or stock makes a W pattern And on the upside, once it gets above typically the middle part of the W, it will keep going. Look at this beautiful trend here. All we have to do is draw some manual lines along the tops and then along the bottoms. And you can see a nice pattern here, and you can play the bounces off the bottom and the top. Okay, so the trend is your friend. You want to follow the patterns. And these channels are not the only patterns. I'll show you some others as well. But let's take a look at what's been going on in the market. Let's fish for some new trades, see what's going on, and this will help you decide whether to get into an option trade or not. And the type of option trade you use can also be determined by what you see on the charts. Now, we're big put option sellers here at the Smart Option Seller. That's our bread and butter. We sell put options and we sell put option credit spreads. If you want a free guide, a free tutorial on what put selling is all about, go to our website, smartoptionseller.com. Let me bring that up right here. Along the top in the headers, free ebook. This is it right here, our free ultimate guide to selling put options. Scroll down, put your name and email address in here. We will send you an email back with a link to read the free ebook. This is what we do. Why do we sell put options? Because put option selling is really a great way to, you don't have to be correct in getting the direction right all the time with the stock market. Okay, you sell put options, you have a huge cushion for error, and it gives you an opportunity to buy stocks at your price at the level that you want, and you get paid to do it. So read the free guidebook. All right, let's take a look at the market and see what's been going on. The S&P 500, the Dow, and the NASDAQ, I believe as well, we're going to look at all three, have made all-time new highs yet again just this past week. Okay, here's the S&P 500. We're using the SPY here. This was the last day of trading on Friday, July 12th, 2024. Made another all-time new high. Look at this. Look at the way the market's just been on a tear since the end of 2023. Has just been going up since then. And we can even confirm that. We'll go look at the monthly chart. So this is the monthly chart of the S&P 500. You can see the market's just been going up. And my numbers go back to the early 1990s. Up, 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 up. So you can see right here, so far in July 2024, all-time new highs. So let's go back to the daily chart here. The market's been strong. It's just been going up. There are so many doom and gloomers out there. Everyone's always calling for a top. Everyone's always calling for a bear market to begin. Everyone thinks the market and the economy and the world is going you know where. But what happens? The stock market just keeps going up. You have to understand, I say this every time, the stock market is made up of companies, real companies that create real products that real people are buying all the time. As long as those companies keep creating these products and people keep buying them, their earnings and revenue and sales are going to keep going up quarter after quarter. Hence, their stock prices are going to keep going up. In the S&P 500, there are 500 stocks that can buffer one bad company. All the others will keep holding things up. The S&P 500 is made up of these great companies. So the market, the overall market has to go up. That's just how it works. Okay. So if you want to become profitable over the long run, you have to go with the market trends, and the market trends is up, bullish over the long run. Okay, but since we play on shorter time frames in our newsletters, we have to have our timing a little bit better. So we have to use these patterns to let us know when it's time to get into bullish trades. Selling put options, selling put option credit spreads, what we do are bullish types of trades. So we look to get in on a bounce. We look to use the channels to figure out when a stock is ready to make a move higher. But what we're seeing right now is the stock market itself is just going up. We use the 20-day moving average here, the 50-day moving average here to let us know if a stock is ready, is pulling back and getting ready to bounce for the next move higher. When stocks trend really hard, they will typically follow along the 20-day moving average. You can see here how the market is moving along the 20-day moving average here. When it sells off a little bit, you've got the 50-day moving average waiting down below. You can see the market hasn't really touched the 50-day moving average except for here for a little bit, and then it bounced again. A strongly trending stock will hug along the 20-day moving average. And if it pulls back a little bit further, it will find support at the 50-day. And if it really pulls back far, you've got the 200-day moving average, which connected here on this little pullback at the end of 2023, and then it just bounced from there. Another thing that can help you is if the slope of the moving average, you can see all three moving averages are sloping upwards. That means a stock is in a really, really, really strong uptrend. 200-day, 50-day, 20-day are all sloping upwards. That means the stock is in a strong uptrend. So if you get a pullback, chances are that uptrend is going to stay intact. That just means people are unloading a little bit of their positions, but you've got the people waiting to buy on the support of the moving averages. So right now, the stock market is super, super strong, super trending in one direction only. Now, what I can tell you based on seasonality, August and September have been pretty bad months for the stock market. It's almost like clockwork. August and September, you will have pullbacks. I don't expect to see anything different this year. August and September, don't know when it's going to happen, but the chances are pretty good it will happen. And you know what? It could be a great buying opportunity for the next leg of the up move. So keep an eye out on that, August and September. If we get a decent pullback, it can make for a really good buying opportunity. Okay, so this is the S&P 500. Stocks look strong. There's really no reason why we should have any kind of full-blown bear market. The Federal Reserve here in the U.S., they're getting closer to start lowering interest rates. When you lower rates, stock market goes up. I mean, it's just, I'm a bull for the long run. These are the things that I'm seeing. There's no reason for me to believe there's any kind of bearish something out there that's going to derail the stock market. Outside of some other global catastrophe, which we saw COVID, but COVID bounced very quickly in the stock market. So things look good for the stock market. Let's look at the NASDAQ. We look at the triple Qs for the NASDAQ. Okay, so here we go. It made all-time new highs this past week, not on Friday, but during the third Wednesday and Thursday this past week. So the NASDAQ, you know, all these strong stocks. You got the Magnificent Seven. We're going to look at some of those individual stocks. These are the stocks that are driving the market. I mean, it's just going up, up, up. And we're going to look at the Dow as well, because I know the Dow hit all-time highs again this week. And I think it finally closed over 40,000 for the first time ever. We eclipsed 40,000 back here in May, but it didn't close above 40,000. It may have closed right on this day. Yeah, so we hit it once there, and then we got above it right here. So more all-time new highs. You can see this piece right here, this day. This was Friday, July 12th, 2024, all-time new highs. So the market is strong. There's no reason why to think that it's going to go down. But we want to use the tips that I'm talking about on how to decide when to get in and when not to get in to a new option trade. So let's start looking at some individual stocks. We're going to start with a lot of these NASDAQ stocks because they're the ones that are really driving the market and they're the ones that are most popular, so people focus on those. So let's just kind of run down through our list here. We have Microsoft, okay? Look how it's just been trending since the beginning of 2023. Up, 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 up. We draw these lines here. Okay, so this was some support. You've had pullback a couple times to the same areas. You have to look back in the past a little bit on the charts. You can see where the support is. So we drew the line. You know, when I drew this line, this was probably sometime last summer. I must have drawn this line, and you can see the support. And finally, when it cannot break through the support, the bears give up and then the bulls just take over. And you can see how once it starts trending, it hugs along pretty good the 20-day and or the 50-day moving average line. Microsoft also had some resistance right around this level, which was probably around $430. It took a little while for it to get through it, but it finally did, and now it's going up. And you can see right here, here's the current 20-day moving average. If you are considering being a bull on Microsoft, This could be your opportunity right here, strongly trending, pulling back to the 20-day moving average. This could be the next leg of the up move. As long as the rest of the market, the NASDAQ and the S&P 500, if everything else is starting to go up, this will be a buying opportunity right here. Okay, so keep an eye on Microsoft, see if it plays out, 20-day moving average. You can see how it hugs along. It may drop down below it a little bit. You can see right here, it drops down below it, but eventually moves back up again. Okay, yes, we'll have pullbacks like this, but a strongly trending stock will continue in that direction after this little bout of selling goes away. Could be the same thing here. Possible that it's going to bounce right there. Okay. Let's look at here. Let's go back to our list here. Intel is also starting to move. You can see this, what's this called, a very tight range. When a stock gets congested like this, it's going to blast one way or the other. In this case, Intel has blasted higher. Okay, I'm not a big fan of Intel, so I don't spend a lot of time on that. Nike just had some disastrous earnings recently, huge downdraft. So you can see the long line that we drew here had its support for a long period of time, and the earnings just dropped it right down below. People keep asking me, Lee, should I buy Nike now? Is it a good long-term potential buy here? Let's look at the monthly chart for Nike. I mean, it fell through the long-term support here. You got this is a 200-month moving average. Now we're looking at the monthly chart, 200-month moving average. So the next area of potential support is going to be in the low 60s right here. Will it fall all the way down there? Possibly, not sure yet. But Nike is a great company. It's not just going to go bankrupt. They're going to figure it out. And it got up to $180 a share. Now it's down to low 70s. It's lost a lot of its value. Sure, you could nibble on some shares here if you want to get long for the long run, bullish for the long run. You may want to nibble on some shares here. But until Nike shows me that it's got a nice uptrend beginning again, I'm not ready to go all in yet. Okay, I want to see the market start to move higher, get the bottom feeders out here, and start to see some kind of uptrend occurring. We've got very oversold here. It's definitely in the oversold area. So maybe nibbling on some shares here just to get your foot in the door could be a way to go. But before you go all in, let Nike show you that it wants to continue to move higher. Okay, that's what I'm looking for. Oracle looks like a great potential buy here. In my opinion, it's got this upward momentum here. This must have been the earnings here. It had, was trading higher. It let the 20-day moving average catch up to it. Okay, because you had the gap up here, so it has to consolidate a little bit of that move. 20-day catches up. This could be the nice support area right here for that next buying opportunity. I think this is all-time highs for Oracle. Yes, it is all-time highs. Just because a stock makes new highs doesn't mean it can't make more new highs. Some people think it's at a high. It can't go any higher. It has to drop from here. Who says that? Why do you think that it has to happen? I get so many people tell me it's too high. It can't go any higher. Of course it can go higher. Any stock could go higher. This pattern to me looks quite strong, to tell you the truth. It gapped up on this earnings move here, consolidate a little, let the 20-day moving average catch up, and now this could be the next launching pad. Let's put the resistance here for now. Let's draw the line, and we'll come back in a week or two and see. Okay? To me, it looks ready to go up through like $145 a share. If it can get through 145, it's going to keep going. Okay, so these are the things you want to start looking for. That's Oracle. Okay, let's look at AMD, and we'll look at some of the other biggies. AMD, which I'm a huge fan of, made all-time new highs here, and then it just got crushed. Came all the way back down here, which was very surprising to me. Here's the 200-day moving average, so it didn't quite get it there, but now it looks like it's starting to move again. Some people sell for whatever reasons. Okay, yeah, if you have to have conviction in the company. If you think it's a great company and their sales are good, their revenues are good, sometimes you have to endure selling like this. People just sell for some reasons unknown to others. Why? Who knows? But if you have conviction in the stock, then you wait for the right setups. AMD looks like it's done with the downtrend here. Okay, if you wanted to draw the downtrend, You know, first you can see the downtrend here. You got the channel. It popped above that. It had a little other trend here, but now it's made the move higher. So now I think AMD can consolidate here and then continue on. Why would AMD just all of a sudden not be a good company anymore? It doesn't make sense. The price should keep going up at this point. Okay, so that's AMD. Keep an eye on that. Apple, one of the greatest companies of all time, and one of the most highly valued companies in market capitalization. Are they, worth a couple $1 trillion now? Could be the most. What's the word I'm looking for? The most highly valued stock. I guess that's what I'm trying to say. All-time new highs for Apple right here. And what's the reason why it won't keep going up? I'm bullish on Apple. You know, it may be getting a little toppy here. You can see the RSI hitting along the 80 level here. So we may get a little bit of a pullback, but look what's waiting right down here, the 20-day moving average. So if Apple does pull back, in my opinion, it's another buying opportunity. You want to wait for the stocks to make the move, the pullbacks to the 20-day moving average if it's getting a little overbought here. Don't get FOMO. Don't get that fear of missing out. Don't want to buy up here so much. Wait for the pullback, okay? And when it comes back to the 20-day moving average, then you can start getting in at that point. Start nibbling there. Use the moving averages as your guidelines to help you decide when it's time to get in or out, okay? Amazon, same thing. Stock's going up, 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 starts to go some sideways, gets the resistance here, and then pops above resistance, which is good. But here it has the 20-day moving average, blue line right here, has the pullback to the 20-day moving average. If everything starts going next week, Amazon's going to keep going up as well. So use the pullbacks. If you want to get long, use the pullbacks to the 20-day or 50-day moving average as your gauge and your guide for your next time or the next opportunity to get in long on that stock. Netflix, same thing. Okay, Netflix, great, strong, trending stock. Had this, what we call the ascending triangle pattern, was moving up, up, up. I was having trouble getting through the resistance, finally got through it. Once again, you could see how it's hugging along the 20-day moving average. But this past week, it got hit pretty good. But look where it found support, right on the 50-day moving average. These numbers don't lie. These things repeat over and over again. If you want to get long Netflix, this is your next opportunity to get a little nibble in here, get in, take a little foot in the door, and potentially or get on board here, buy some shares, or do some bullish option trades right here. For the longer term, you need to give it some time to move back up. If you're intraday trading, these 1-minute charts, it's really hard. For me, I'm going to seriously take a look at Netflix this week for potential up move in the near future. Okay, that's Netflix. Let's see what else we have. Tesla. We got to talk about Tesla. Tesla finally had its blast higher, had been in the downtrend. You can see the downtrend was consolidating and then finally moved higher. But look how overbought it got on the RSI, which coincided with the move with the top right up here. So it's got sold off a little. It's come back down, so it's not as overbought. But will it move up again from here, or will it try to come back down towards the 20-day moving average? Hard to say. I've always had trouble with Tesla trying to figure it out on the stock charts, so I don't really do much with Tesla. But keep an eye on it. If you're a Tesla bull, this could be start of the next leg higher for the longer term. Okay. What else do we have? We want to look at some stocks that are making some good moves. Oh, let's look at Warren Buffett. And this is Warren Buffett's Berkshire Hathaway Class B shares, the BRKB right here. This is the lower price. The Class A shares are trading like, let's just see what the price of the Class A shares are. Hundreds of thousands of dollars per share. It's $639,000 per share. So we stick with the Class B shares, which are much more cheaper, not cheap, but cheaper than the Class A shares. $424 We drew the congestion pattern. The congestion pattern is when a stock gets tighter and tighter and tighter and tighter, and eventually it's going to blast out in one direction or another. The way you can kind of gauge which way it's going to blast out is from where it was coming from. Okay, so the stock was bullish, so more likely than not, after the congestion, it's going to move to the upside. I talked about this on Twitter the other day. There's really no reason to deny or hold Warren Buffett down. The guy's a genius, an investing legend. You don't want to bet against him. So here's where the next leg of the bull move starts. If you want to take a look go back to our website here under the services tab. Here's our 2 newsletters. We sell put options, and we sell put option credit spreads. But if you want to take a look at something that I wrote about Warren Buffett, if you want to ride the coattails of Warren Buffett using a different type of option trading strategy, take a look at our report here, and it could be quite interesting to you. And the other thing we have here is our put selling video series. If you want to take a deeper dive into what put selling is all about, on top of the free ebook, take a look at our put selling video series. It could really get you to that next level. It also comes with 30 days free to our put selling newsletter. Okay, so let's get back to the charts here and see if we can wrap it up. So that's Warren Buffett. Anything else? Let's look at Meta / Facebook. Also strong stock, but kind of trading sideways here. Has the pullback, fallen below the 20-day, heading towards the 50-day here. Sort of sideways trading. I'm not huge on Meta right here. Might have a little more consolidation sideways before it makes the next move. The next move will probably be higher only because that's the way it's been going. Just doing some consolidation here. So keep an eye on Meta for a potential up move in some time in the future. Google, same thing. You can just see how it's just kind of hugging along. 20-day moving average, hasn't touched the 50-day in a while. Very strongly trending stock. RSI sideways, not overbought, not oversold. So that means it's good to go to continue the up move. Maybe a little bit more pullback to the 20-day, and then the opportunity for the next leg higher. Use the moving averages as a gauge to help you decide when it's time to get in. Anything else on here that's really, all right, NVDA, we'll look at the last one, NVDA here. Just an incredible move. Everybody knows NVIDIA. That's one of the stocks that's really been driving the market higher. Just look at this incredible move. All-time highs here. Had the pullback. Once again, I've said this so many times, pulls back right to the 20-day moving average. And it's sitting on it right here, right under $130. It had the split, had the 10-for-1 split recently. It's gotten a lot cheaper on a dollar basis. That means a lot more people can get involved now. A lot more people can push it up again. This could be your last opportunity, your next launching spot for the next leg higher. Okay, take that as a grain of salt. This is not investment advice. I'm just telling you what I see here based on experience on how stocks move, as they connect with the moving averages, especially all upsloping. The trend is intact. It is in an uptrend. There's no reason why to think it's all of a sudden going to stop. This is just a resting point for the next leg higher. More often than not, it will continue to go higher. No guarantees. There's never guarantees, but more likely than not, it will continue to go higher. So you want to wait for these higher probability setups to get into your option trades. And that will definitely help the results of your own options trading. Okay, that's the only way I do it. It's the way that we get into our trades. But we also want to give ourselves cushion for directional error. We're not going to be right 100% of the time. So having directional cushion is a great thing. How do you get that? By selling options, specifically put options. Put options the way we do it, selling put options the way we do it gives you a lot of cushion for directional error. Okay? All right, that's it. So the whole goal here was to give you an idea of how to increase your options trading profitability. Use the charts, watch the trends, look at the moving averages. It's all good to help you. All right. If you found value in this video, please give me a like, give me a thumbs up. Leave me a comment below. I'll always respond to your comments as long as they're worthy. And send me an email if you want. I'll always answer your emails. Also, in the description below, I have links to other websites and books that can help you along as an options trader. All right. Once again, we make these free videos for the trading community. We all want to become better option traders. All right, that's all for me. I will see everyone on the next time. And this is Lee Lowell signing off.